This is Eric Muathe with Muathe.com. All is well. Let's take a look at some of the stocks that are doing well today. So in today's market, for the day, top gainers for today, we can see one of the stocks that I would like to discuss is right here. And it is up about 30% plus. Now the question is there a way to own this stock before it explodes? Is there a way to increase your chances of owning these types of moving instruments? Wouldn't it be nice to wake up and see your stock is gapping up or moving and is among the top gainers in the market? Well, let me suggest a way. So one of the simplest things to do is, as I've mentioned in recent videos, is one of the things if you're looking for momentum is to make sure you understand which stocks are moving on a day-to-day basis, because what happens is you start identifying a certain trend, some sector of the market, some group in the market is moving for whatever reason. Again, the reason doesn't matter. We don't care about the reason. All we care about is powerful movement. So by spending some time making sure you account for the top moving day-to-day top gainers, and that does take some work and some effort, but to keep up with the top gainers is one way to avail yourselves to these types of opportunities. Now here's the stock, and what I want us to pay attention to is there was a huge move in the month of June. Huge. We're talking about a move that takes this stock from about 10 and under a month was trading at 34. That's a big move. So that's the monthly view. If we take a look at the weekly view, we can see that took 3 weeks to generate this type of energy. Now the question becomes if, and more than likely, by the time you become aware of this instrument, this has already happened. So you've missed the initial move. Again, the question becomes, how can you avail yourself to this type of move should there be a follow-up move? That's the question. Now you'll notice after every massive move, there's always going to be a pullback, and it is this digestion consolidation period here, right? So that's always going to happen. So our job is to wait for the next potential move. Now one thing you'll see here is take a look at the size in terms of price gain, and after it settled down, take a look at what has happened over the last 3 weeks. So the same thing that happened in the month of June is happening in the month of August. Now, how do you time this? Now let me show you how I approach this. Is I wait for the next breakout. So I sent out a breakout alert to paid subscribers here, going back about a week ago. So we were waiting for this breakout, because you have to also appreciate the following, that just because it pulls back doesn't mean that you're going to see this move here. In fact, it is not unusual. A lot of the stocks have this initial pop, they settle down, try to break out, and then they fizzle into nothing, and this can last years. So they can go into a sideways, no action, price action behavior for years. So if you are trying to avoid this fake bounce and a fizzle, the best thing to do is to play the breakout, because what that happens is, yes, you might not buy it right here during the bounce or here, but understand that even at this particular point, we have to understand the reality. The reality is that there is a possibility of a bounce, yes, and there is a possibility of a break much lower. Now of course, nobody wants to be part of this downward move. That's obvious. But what we want is absolutely positively, we want to be able to capture some of this upside. That's all we care about. Again, we do not care about the reasons. Reasons are, I guess, in a way irrelevant. The fundamental reasons why it's moving, in my opinion, irrelevant. So if you want to catch the bounce, best thing to do is play the next breakout. And this is why I sent 2 breakout alerts, one on August 14th, and the breakout buy point was at 27.22. Here is the breakout alert as a future potential breakout based on the monthly closing high from June. And because of some other chart characteristics that I was watching, I sent out another breakout alert on August 17th, and this time I gave two breakout levels. One was on the monthly as a potential future breakout, and the other one was on the weekly. So a weekly breakout level, a monthly breakout level, right here. Now back to the chart. One of the reasons why I had this interest is because I could see the probability that if this stock moves back or holds above 69.1, there's gonna be a positive, powerful reaction. Hence the reason why I really was and have been watching this instrument. And of course the RSI and the MACDs on the monthly are perfect. This is exactly what we look for. It's perfect. RSI is perfect. MACD is perfect. And this is based on the ultimate Muathe breakout, which you can guess is my own researched method. Now, on the monthly, as I pointed out, you can use the monthly closing high here, as we did, as a breakout. And that breakout took place couple days after the alert here. This is the monthly view. If we take a look at the weekly view, then the breakout was here. Either of them is valid. Now, something else you can also do is understand that when this instrument was moving in this time period, other instruments related to whatever is moving it were also moving. In other words, it is unusual, mostly, for an instrument to stage 3 back-to-back weekly gains without some other instruments also moving, kinda in sympathy, but also because of the same reasons. And it is also important to pay attention to those instruments that were moving when this was moving, because when one of them starts moving, they all tend to move together. In other words, it is important to also understand why they are moving in terms of sector. What instruments are moving together? Now notice as I give a couple of examples. Take a look at the following. And we're going to be taking a look at their reaction here in June. So here's instrument number 1. This is the reaction in June. Take a look at this move. Is it beginning to move again? Yes. Remember, they all move in step. And if you know which ones are moving when they move, it is easier to identify which one you have an interest in. Take a look at this other instrument. Was it moving in June? Yes. Is it starting to pick up momentum? Yes. And by the way, it also means that if one or two of them start failing, the others are going to fail. But we are not interested in that. We're interested in upward momentum. Oh, by the way, here's another one that was moving in June. This one was in late July. So again, we have to understand what's moving, when they move, what sector. Is it a small niche? Is it a something unique? And all of this, for the most part, seem to come from a sector that is being or has a blank checks sector demarcation. So I don't know why they are moving. Don't care. Doesn't matter really. And if you click on the blank sector, blank checks sector, you've come up with these names. Now the question I have for you is, are you familiar with these names? If not, and you're trading the US market, the question becomes why? Because some of these are truly in the leadership of this current move to all-time highs. And one final note, you'll find that a lot of the things that investors do is backwards. and one could argue is wrong in the way they approach the market, because if you trade stocks, you find that most traders spend all their time looking at individual stocks, and then maybe they might spend some time looking at individual sectors, and then maybe they might glance at the general market. In other words, they go spend most of their time stocks, let's call it 90%, and then they'll spend about maybe 2% maybe as the next consideration in terms of sector, so it'll be number 2, and then number 3 they'll glance at the market, because we can't really avoid that, let's call it, and I'm just guesstimating here. In my humble opinion, the biggest consideration should always be the general market, and then we can go to sector, and then we can go to stock picks. So let this call this stock picks. We can call this sector / industry. Sector / industry. If the general market is stable to bullish, you can definitely play breakouts. And it's simple. If it's sideways or bullish, you can play the breakout game. And that trend should be obvious trend. You should just look at the market and determine, is it sideways? Good. Is it stable to bullish? Good. Then play breakouts. Then your next consideration is what sectors are moving. Those sectors are going to lead you to the leadership stocks, and you want to spend your effort only considering the best stocks within the best industries. Again, the best stocks within the best industries. Now, from time to time, while you're looking at the top daily gainers and things like that, you'll come across some individual stock names. This individual stock name should give you an impulse, a nudge to go back and check the sector. So you keep going around here. The sector will get you the best leadership stocks within the sector. Sometimes you come across an individual name. This individual name that is doing great on the charts should impulse you or move you to go find what other stocks are leading in that sector. And of course, it also means that we stay away from lagging sectors because they tend to underperform. One final observation. It should be self-evident if you've been trading for a while, or if you're new to this, that each market has its own season. And what I mean by that is great today, gone tomorrow. So just understand that just because a sector is on fire for a certain period doesn't mean it's going to continue higher. These things explode and then they go into a burst mode. In other words, there's always flux. There's always changes. Nothing stays the same for too long, which is another way of saying don't fall in love with a sector or a stock. Only fall in love with them as long as they are producing. The moment they turn cold and warm and sluggish, get rid of them. Move on to the next sector or industries that are working. Don't stay too long, because really nobody's looking for a long-term relationship. Just remember, the momentum game is a fun game at some level because it just keeps you in the game as long as there is some price action to the upside. Most of you definitely don't have the time to do all this deep research, keep up with what's moving. So instead of continuously missing on the top gainers, why don't you find somebody who specializes in this type of action? It doesn't have to be me. It can be anybody else. Eric Muathe@muathe.com. Love and light, light and love. Namaste.